I'm lost for words. We're down over 2%. Blood on the markets. You look awfully calm. I know a lot of people are on holiday today. Perhaps a good thing, and allowing the hype and the negativity to get through the market. Do you think this is just a knee-jerk reaction? And we keep talking about how investors don't really pay cognizance to ratings agencies and any moves that they do. But here is the proof. We are seeing negativity throughout the market. Massive sell-off.
Absolutely. Investors do pay attention to what credit raters are saying. I mean, the biggest economy in the world downgraded by a notch from AAA to AA plus, and it is just carnage. It's just terrible in the market today. You were mentioning that I look calm, but I think it's the sedatives which are passing around in the desk earlier. But it is terrible. It started off in Asia and is now carrying on into our market, and we're all just waiting for the United States to open later on this afternoon, waiting to see what their reaction will be. The chances are very high that it will be very negative reaction, so we'll see more sell-off later on this afternoon. But all key support levels have been broken through today, and the market is just hemorrhaging as we go along for the rest of the day.
Yeah, well, I mentioned a little earlier that the US has never not had a AAA rating, and also quite significant that S&P assigned the AAA rating to the US in 1917, and now for the first time downgrading not only the rating but the outlook as well. And they're talking about stability within the debt scenarios that are playing out, the effectiveness of the new policies that have come to the fore to raise the debt ceiling. And we know that in terms of strengthening the balance sheets in the US, that some people are just going to have to take the pain. Is this going to be an interim scenario that is going to play out, or do you think as things start to look slightly better and corporate balance sheets start to recover, which we have been seeing, that the US credit ratings could change significantly? And of course I'm alluding to S&P as well.
No, it's no longer about corporate balance sheets. We've been having, results out of America this whole month. Since July, actually, and they've been solid corporate ratings. It's really about the government balance sheets now, and it's about the state of the government, the health of the government, and it just goes to show that S&P came out saying that they do not believe the measures that the United States Congress took are sufficient or warrant the AAA rating, and China is upset about it, and Japan, as you mentioned earlier, were the biggest investors in the United States, upset that they couldn't resolve this in time and couldn't resolve it in a more progressive manner. And so it's a matter of just looking at the actual governments now, and that is more dire. The G7 came out, as well as the ECB came out, saying that they will try and do their best to keep economic stability, to encourage economic growth, and to get some kind of financial stability, and everybody is almost at a loss right now. So obviously, we will see the kind of sell-off for a longer time. There was mention last week of QE3 perhaps in the States coming into play again, or some measures being adopted there for QE3. But will that be enough? QE3 just means that it's still persisting, the bad state is still persisting, yeah, and they need more reforms like that in order to survive and to recover. So I think we're going to be seeing these markets for a very long time to come. Certainly, perhaps not much losses as 30 to 40% losses we saw in 2008, but we're certainly going to be seeing maybe about 15 to 20% losses further in the market until these things are sorted out. So,
Ntombenhle, what are you doing on the trading floor right now? You're talking about the sedatives that are being passed around. Are you closing off positions? What is your move?
Yeah, I think I think what the traders are mainly doing is trying to be, to stay at least out of the market for now, or to gain some kind of, or to put in some kind of short positions in the market, because it's a major sell-off. I think should perhaps some reforms come around soon, they need to be good position to buy, at these low levels, because we've got a huge corrective rally somewhere in the midst. But whether that will happen towards the end of this week or next week is all dependent on what the United States says. And I think for today, we're just taking money off the table, waiting for the United States to open, and then we'll make decisions then.
Yeah, not a lot of companies on the top 40 which are gaining ground currently. I mean, AngloGold is up almost 2%. Old Mutual is an interesting one because it's up 0.9%. We saw numbers coming out on Friday. We had some results coming through, and most investors were very optimistic with the likes of Nedbank's results filtering through into Old Mutual as well. It seems that most are optimistic about Old Mutual going forward. Is this what is happening with the share price?
Yes, Friday was a bad day, I think, generally in the markets anyways, and I think punters are now getting back involved, looking for value. And Old Mutual results, they did achieve their ROE, they did manage to cut costs, they have managed to do a lot in terms of what they had set out to do. They have reduced debt, and so I think a lot of the punters are coming out saying, there is value in Old Mutual, and they're rewarding them today rather than rewarding them on Friday as they should have when their results came out. But it's a very good day for Old Mutual, despite what is happening in the general markets.
Okay, well, Marion Roberts also out with some news today. Perhaps not the best day to come through with some news, saying that it's going to sell its offshore construction business to Malaysia's Supercrest, and of course it's about Australia's listed Clough, which is 62% owned by Marion Roberts. The company says that it's going to be predominantly focusing on its South African operations. Clearly a good move, do you think?
Yes, I think that is a good move. The shedding of that business is going to be $133 million US dollars. I think the value of that deal, and they'd use that to pay down their debt and to look at future growth and opportunities there. So a very good use of that money, and I think it has been well received by the market today. Okay, it's not up, it's not trading up from Friday's levels, but must take into account that today there's a huge sell-off in the general markets, but I think they will be rewarded sometime later. But as you mentioned also earlier, it's still got a lot of regulatory and shareholder approvals to go through. So once that is done, I think it will be approved, and Malaysia is very keen on the offshore exploration business, so I think it will go through.